The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and thanks for listening to us. Don't forget, you can also listen to us on your mobile phone at tfnn.mobi. And if you have any questions, feel free to give me a call about stocks, forex, futures, options, binaries, and Nadex spreads. And looking right now, the radio call-in line, if you want to give me a call, again, 4 questions, 877-927-6648. Again, that's 877-927-6648. 4.8. All right, so let's go ahead and check out where the market is at right now. We can see that the S&P is basically flat on the day, and it's been bouncing around a little bit. But right now, it has moved back up pretty much to its settlement price of yesterday after pulling down almost to that half deviation mark. NASDAQ is it had a pretty massive move down this morning, but it's working on trying to get it all back. And it actually moved down a little bit to the 0.7. We got a Russell is up a point on the day right now. And the Dow is so unchanged right now, flat on the day. And then looking over at gold, we got gold down 2.5 points. We got copper is up, almost 0.5%. Same thing with silver. Silver did have a nice run there at the end. It sort of pulled back and then just took off. And same thing on gold. But sort of, moving back up after that big drop earlier. And then looking on over, we got corn is at 2.75. And so sort of, falling in line. Like gold, copper, silver, all of them. Even the corn barely moving there. Soybeans really flat, 2 points on it, which is a very small move on soybeans. And then oil down a mere 4 cents. So it's Expiration Friday. Where's come on now. Let's get some movement. Looking on over, we got natural gas is up 2%. You can always count on natural gas, right? So 1 to 2%, well, actually 1 to 4% a day. And you can trade that on Nadex, of course. Euro dollar, we got it down 53 pips. Pound dollar down 125 pips on the day. Aussie dollar down 37. US yen up 20. US Canadian up 74. US franc up 4 pips on the day. Obviously, King dollar showing a little strength today. So markets haven't quite figured out what to do with it. But the dollar showing some strength. And, the news got leaked out last night. JP Morgan got it leaked out through them. And then it got officially, put out there today about Republicans looking at pushing off the debt ceiling crisis even further. No surprise. But anyway, so, that's had this rocky thing going on. And that was... We had that, and then one of the things I talked about this morning in the Tiger's Den, and I was sort of shocked we had this horrible number come out on the Philly Fed Manufacturing Index, and came out yesterday. But the market acted like it didn't happen, okay? And I get it, market's erratic, it's crazy, doesn't always pay attention. But, it really acted like it didn't happen. And I'm all sitting back and I'm like, what is going on? So why would we not see any kind of reaction from this? And so I started digging around a little bit, and I find that the Fed decided to launch at the last minute. Talked about this a little bit, like I said, this morning on our show. At the last minute, decided to go ahead and, now, of course, not at the last minute to it, and I'm sure that the market knew about it. That's why we had that. I'm sure that is actually the number one reason why we had the massive rally from the previous day. But they decided to go ahead and launch a little extra bond buying. So, and they posted up on their website, 9:55, conveniently timed to be just 5 minutes before a really bad Philly Fed, Fed manufacturing report coming out. And so they released it 5 minutes before. It's a same-day settlement. The operation will go for 5 days, but same-day settlement. And they're going in, they're doing repos, they're doing mortgage back. We know this is happening, but boom, they launch it, and they're like, hey, we may do this at any given time. And so what I did is I was like, hey, I want to know when this is going to happen again, because I would have just bought. All right, if they're buying the bonds and they're doing all the stuff, just buy. And so you can go in. You can actually, obviously, you can follow me on Twitter, but you can also set an email alert up for this specific announcement, any kind of temporary open market operation that happens. And you can go back and you can see the last ones and see what kind of impact they had on each day. And but so we got the one right here, and then lo and behold, what we have today, we have some more market operations going on. So be interesting to see how this plays out. They're propping. They are propping the market, okay? And so they're trying to do everything they can because this thing is, I think it's ready just to fall. But there's nothing lines up. And the volatility is so extremely low. I mean, that's just asking for it. Now, I mean, you don't just go short just because the volatility is low. And you don't just go short because you have an opinion, because opinions get you killed, okay? But that's the reason why. Because no matter what your opinion is, and no matter how good or bad the fundamental announcements are, you don't fight the Fed. Okay? There's don't fight the trend, there's don't fight the Fed. So, Fed decided to come in, do a little rescue yesterday, decided to do a little rescue today. And so, they're just laying it out there. And you can see, last time they did this was back on December 3rd, and then you go back, and you can look at all the different reports. But it's definitely, it's on the New York Fed's website, under their open market operations. So markets, open market operations, temporary. And then you can click, and that's newyorkfed.org. And you can click right there on email alert. You can set up email alert, so that way you'll get a notice. And what I like to do is I like to actually set up my cell phone, so that way I get a notice whenever stuff like this comes out in the morning. But anyway, so check that out, and you'll be glad that you're aware of it when it happens. So it's sort of one of these weird things. Now all of a sudden we have to have this page open also, whenever we're trading. But at least it's helpful. At least you know it's there. And it looks like they have a time of day they like to do them, 9:55. And so they'll go in here. Now this one is same day, one day operation. That was yesterday. Okay, so yesterday's that propped out, they did everything in a single day. Okay, so this is Thursday, January 17th. So this is a massive, like, in the sense of, like, they went in and they didn't do a little bit over a period of time. It's like right here, the one they announced today, they're doing it over a period of 5 days. Okay? So they're spreading all this out over a period of 5 days. Down here, they're going in, and I love how, amount in billions. You gotta love this, right? Amount in billions, and they place it in decimal points for you. So it doesn't look so small. It's only 0.21 billion. It's not that big. But so they're going ahead and they're putting it all on there. You can check it out. But notice they did all this in one day. These they're splitting over 5 days. So this is now that we gave it a boost, we pushed it past that high from September. Now let's try to give it like 5 days just to keep the uptrend going. So pretty much what's going on. And it's just very, very good to be aware of that. Okay? And so again, that announcement comes out, and I'm going to have to start checking this every day right now, and for a while. But the email alert should help out with that. They have an RSS feed, Twitter feed, all that stuff. But you want to be aware of this. And right now, there really shouldn't be much coming out because we got 5 days. So we know it's happening over the next 5 days. But keep that in mind in the back of your head as you're trading. The Fed is pumping right now, and they pumped like crazy yesterday. What they did, they're going to do as much over the next 5 days as they did yesterday at once. Okay? So anyways, but very, very interesting, very, good news to be aware of, very helpful. Obviously, that is a market moving event that you want to be aware of. And so I want to make sure that you're aware of it here at TFNN. I'll go ahead and post that link for you over there. And yeah, I see it posted, Tiger. The market will never go down again. I remember Bernanke making the statement, and I was like, wow. And this was a couple years ago. I remember him saying, I can guarantee you we will never have a deflationary depression again. I'm like, that is not a good statement, because what that really means is I will print to oblivion, and I will rake the money out of your savings account like crazy. But no matter what, we won't have a deflationary. We may have an inflationary depression. We won't have a deflationary depression because I can just keep printing it all day. So now, I mean, a gallon of gas may cost you $25, but hey, that's not deflation. That's inflation. So, but yeah, it's just absolutely like berserk what's going on, and Japan's in on it, and you got Europe in on it, And of course, you got the U.S. in on it. You got other countries getting pissed off. So you got Switzerland and Norway and Russia, and it can go down the list. And they're like, seriously? And it's just, an absolutely crazy stuff going on. And let me see here. I'll pull up a couple other things from what we were talking about. We called out a trade this morning. I was on the show on the Bull Bear Binary Hour. Let me pull up, right there. But depending upon, how you set your charts up and everything else, we were going in, we were looking at, potential possibilities for trade setups. And one of the trades we were looking at was a buy on the Euro USD. So, and Steve got a confirmation right there at 11:30 on that buy signal on the Euro USD. And I got one a little bit later. So, but both of us were right about, not too far apart, but that's awesome on Steve's part right there. So 11:30 right there. Mine didn't come in until a little bit later, like right over here around 12:30. So, but at the end of the day, not that big of a difference. We both saw the same thing. We both saw long Euro USD. And what that's really cool is if your analysis is good and it's correct and you use it consistently, it's amazing how people can look at the market in two different ways and it's going to say the same thing. And, I saw the expansion point, and Steve was looking at the fib levels. He's looking, of course, he's all about the chart patterns. He's got those down like crazy. And so we go in, we put that buy order on, and we were looking over at the potential trade setup right there. And let me see, I can show you the spread. And I'll pull it up over here in Nadex, and we'll actually look at the spread and the price. And like I said, Steve gave out that confirmation there on that 10-minute chart. So let's go up and look at it live and see what would it look like. Okay. So I can actually, what's cool is you can go in and you can pull up the charts in Nadex of the historical trades. So if we're going on there, first thing we did, by the way, I'll go ahead and just do a recap for you. First thing we did is we went in and we used the spread analyzer. And went right here, went over and went to the box spread analyzer. Get 2-week free trial to it right there on the homepage at tfnn.com. And we chose spread analyzer, obviously. And we chose Euro USD. We put in our risk reward of at least 1-to-1, $100. And we had a couple different trades that we were looking at. Okay. And I'm going to have to reset this a little bit just so we can see the trades that we were looking at. And we went in and we were like, okay, we were looking at one that went all the way till expiration. And we wanted a low risk trade. And so we had to find, first we were looking at our buy order. And the buy order was a little bit lower than we initially wanted. And so we actually did a combination trade. And I'll go into how we combine the two spreads. When we get back from this break, I'll pull them up on there and I'll show you how I made my own box spread. So when there's not one there for you, I'll show you how to make your own. Stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And just doing a little follow-up so that we're listening to us and what we were looking at. And basically what Steve called out this morning was he called a bounce basically off the fib levels, and he was looking at the parameter of 32867 as being, the percentage he was looking at. And he was looking at a bullish engulfing pattern on the candles. And if you combine the 1120, 1130, you actually get the bullish engulfing pattern, and the RSI actually hitting 32. So putting all that together, and if you want to learn to trade that way, but Steve is awesome. He will teach you how to put these patterns together. He will teach you how to combine the whole thing. So definitely check out his newsletters and his courses. It's a great combination to the diagnostic service that I offer, because I offer you the deviation levels, and I teach you how to use the spreads and the binaries, and you use the scanner to find the best spreads that are available. And Steve comes in, he teaches you a lot of different methods on how to pick buys and sells. So the trade we were looking at this morning earlier, and we actually hedged it off so the risk wasn't as high, but we were looking at this trade right here, the Euro USD 32.25, 34.75. Okay, and we hedged off the risk. I want to see if we can find even a decent hedge right now. So most of those would have expired out. That one might work. There we go. Okay, but the line was a little bit further over. You can check the archive from the Bull Bear Binary Hour. And I can show you also, so when we came in, you get that buy signal at 11:30 on the Euro USD. And let's just say closing price 32.94, so let's say we're getting it right around there. then what that's going to do is allow you, because it was trading pretty much on par. So you're in at 32.94. Right now you're up at 33.27. So that gives you about what would that be? 32.94, 33.27, 27 plus 6 is 33 pips. And we have a goal of based on the fib analysis and everything that Steve put together, a goal of 33.50. And one thing I have is I have the fib deviation levels, okay? And so what I'd be doing along the way is I'm looking for, hey, if it falls back below a deviation level, then I'm looking to, basically tighten my stop and, keep what little profit I got or hopefully capture a lot. So when we pass up for us to 0.7, I'd actually be tightening the stop to the low of this bar right here. On the 10-minute bar, that'd be 33.15, okay? When it breaks through the 0.5, I'd be tightening again on the bar that broke through that. Going for that 33.50, that being the profit target, you can go ahead and set a take profit order inside Nadex to sell out of that spread at 33.50. Okay, and 33.50 being the exact goal, you may want to, maybe go down at 33.47 or something to do with bid-ask spread and things like that. But so we're right there, we're very close, and just an excellent trade setup, a great reversal right off of the -1 deviation. But yeah, I wanted to give you a full fill-in on that, and like I said, definitely go back and pull up the archive so you can see the beginning and end of the trade, and we'll see how it ends up here at the end. We got about an hour and a half left until the FX closes for the pits, and Nadex follows the pit hours on closes, not on opens, which is pretty cool. So they'll open like at 6, but they'll trade as late as the pit stays open. And so since the pit closes at 3, they close at 3 for the FX. And then it's always important to remember that they're following the pits because they're an exchange and all that, but the FX on Nadex follows the spot, meaning the underlying market is the spot. And you're only talking in between like 1 and 5-6 pip difference between futures FX and spot FX, but you want to make sure you're looking at the right chart whenever you're trading it. All right, so that gives us our summary, and filled you in a little bit on some cool stuff that I think is really important that you're aware of. And like I said, they did that whole 1 day, like they're going to buy over 5 days what they did in 1 day yesterday. So they're going to pump and keep greasing that wheel a little bit at a time and easing it through. But it's very, very important that you do know when that's happening. So that way if it doesn't make sense of what's going on, that's why it doesn't make sense, because this has nothing to do with sense. It has to do with what the Fed. It has to do with billions, right? It has to do with what the Fed is doing. So let's go ahead and look at what else we had. We had that announcement I talked about last night, and go ahead and pull up the chart on it right now, okay? And we'll see exactly what it looks like. And let's see. All right. Okay, so pulling it on up here and going over to the pound dollar. And one of the things I said, if you recall, is like the thing you need to pay attention to tomorrow night, or tomorrow morning, I guess, was the pound. I was like, hey, the fundamental news, I'm not talking about necessarily purely trading it, okay? But it lets you know what market to focus on. And that's the big advantage of using the fundamental news. So we're going to talk about that report and how you could have used it to trade on Nadex. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. We're talking about the announcement that said tonight you need to focus on pound dollar. That was the big focus, was on the pound dollar. And so what we want to do there, here, let me move this one. What we want to do there, so there's the trade from euro dollar. If you're inside the Tiger Den right now, you can see the exact call word and everything where we put together the entire trade, the divergence, all that. And so check out that picture right now if you haven't already. And he lays it out. Let's see if I can show it, if I can maybe shrink it here. Might as well go ahead and do a nice little recap there. Makes a little more sense when you see it from the same chart. I can't shrink it, but I can do this. There we go. All right. So we get an RSI divergence. Okay, we got a lower low, but we got a higher low on the RSI. Okay, and so that obviously is extremely helpful. Number one thing, one of probably the number one things I'm looking for on trades. One, to not do a trade. So if I'm looking to add to a short, when I see a divergence like that, I don't add to a short. Okay. It's one of my things I've really seen. I've had other students that have even taught me that. So it's a great thing to do, is to look for the RSI divergence. It's very, very helpful. Okay. And so, I mean, you got it here, but you also even have it like this right here. And then, so you have the divergence, the entry point, and you hit the negative 0.786 retracement level. And that's puts your ABCD down, RSI divergence, all that going together. And Steve explains this probably better than I could any day. But at the end of the day, awesome trade, and I'm hoping some of y'all caught that. And so now let's go ahead and let's check out the pound dollar. So one of the things I'm always telling people is, hey, focus on the fundamentals, not because I want to trade in the fundamentals, and trade in the news. And I mean, there are advantages to doing that. There's ways to do that. But it's really helpful, especially for nighttime traders, okay, to help you focus on what to trade. So there's so many things out there to trade. What are you going to trade today? I mean, that's really what it comes down to. What are you going to trade today? And I think that's one of the hardest things. You hop on Nadex. I get that question a lot. Well, what should I trade? What's your favorite instrument? What moves the most? That's probably the number one question I get. Which one moves the most? And I'm like, well, there's this one that moves the most all the time, every time. They're like, what is it? And I'm like, yeah, it doesn't exist. So different ones move different amounts on different days. And so to know what's going to move the most, you need to look at like what are some of the driving factors that could help it be the largest moving thing. So obviously FX moves a lot usually. Some days FX is just flat. Then the ags are moving like crazy. Some days the ags and the FX is flat, and all of a sudden you got the markets moving. So the indexes. And so the news is usually your big catalyst that helps out and helps you focus. And so we got pound dollar. Report comes out, 4:30, okay? So 4:30 last night, right here, report comes out, and it's negative. All right, they expected it to come in at 0.2, came in at negative 0.1. All right, which is worse than the expectation. It was worse than last time, okay, which was at 0. So came in worse than last time. And it was worse than last year, which was 0.6. So on all three accounts, it missed. I mean, this is a big miss. Okay, this isn't just a miss because they barely missed expectations. I mean, they missed last report. They missed expectations. And like I said, they also missed from 1 year ago. So things getting worse. Like right now, short-term and long-term, all bad. So you put it together. Okay, what are you going to do? Well, one, you're going to have an expectation to at least get in at one deviation, okay, or to get out at one deviation. But when all three marks miss, you're expecting a larger move, 1.5, possibly 2 deviations, okay? And what comes out, well, you don't know this until, of course, the news comes out. It comes out, it moves pretty fast. I mean, you actually do have a little bit of time. You have about 5 minutes, okay, to place your order right away after the news. That 5 minutes lets you go for a 1, 1.5, and 2. And you could literally layer. You could literally do 3 different binaries or 3 spreads or just 1 spread and go short. Okay? And so you're going in and you're going short on that spread or short on the binary. And the only issue, and this is the issue I tell people about with spreads, okay, is that they're going to expire on the FX. Like one will expire at 11, then one will expire at 7, and then one will expire at 3. So those are basically the 3 longest spreads you can do on Forex, besides the master spread, which is so big, most people don't trade it. So the ones that you want with the low risk expire too soon. So a lot of times, if I'm doing overnight and I want to ride the move into the end of the next day, okay, because a lot of times you'll get that FX move like all the way to 11, 12, maybe 1 o'clock. And you want to ride that move, then the binary a lot of times can be a better choice. And so you could do what I call tiering binaries, where you go in and you literally pick a binary at each level and put the trade on. And you can even do 4 binaries. You could do one here, it's $50, okay? And you do one here, it's going to have, say, $30 risk. And then you have one here, it's going to be $20 risk. And then one here, say, $15 risk, okay? And so there's 4 different tiers of binaries you can do, basically an in-the-money one, an at-the-money one, and then a couple out-of-the-money trades as well. You could have got in during that 5 minutes. Now, you could have also let it go and pull back. We talked about that strategy. So there's the straddle before it, or the strength, straddling a spread, but I probably wouldn't straddle a spread that only has a couple hours left. So you could strangle the binaries, like a higher binary, lower binary. You could go directional before the news. That's 50-50, okay? You can wait till after the news, but sometimes it takes off. So maybe it took you too long to analyze and, trade's already moved down a deviation, it pulls back. And then you can do the pullback. So before or after news or on pullback. I like pullback's probably one of my favorites. So you don't always get it, of course. Sometimes it doesn't come back. But when it pulls back, then of course, like I said, you got your in the money, you're at the money, and your 2 out of the money trades. You go right for all those, and you can probably leave the one that's in the money. You leave that one on until expiration. So that's one of the rare ones I'll tell you to actually hold. Okay, your expectation, and now do put on a take profit. I mean, if you're selling it at 50 or whatever, yeah, put a take profit to buy it back at 3. So I'm not saying you have to hold it all day, but you're looking to get a majority of that profit on that one. Okay, but when you're choosing out of the money ones with a certain strike, then you're looking to get out of them when they get there. And like this one right here, if you would have got out when it got here, you made money. If you waited, you're giving it all back right now. Okay? So, and you had it's a nice profit. You went in and you sold it for around 10 to 15 bucks, and you're able to buy it back really, really cheap. And we can actually pull it up. We can look at the history, and I'm just sort of guesstimating based on experience, but we'll see what would that binary actually be on pound dollar when that news report came out after it did that, either right before the news or right after the news or on the pullback, either one. We'll check out both of them. And so I can go over here, and this is very helpful. These charts are really helpful for you, helping you understand price. That's why I like the charts. I don't so much trade on the charts, but I use the charts to help me whenever I'm, just studying, analyzing, looking at price movements. So we got 1.5855. That's the deviation level for the day. That was a -2 deviation level. And it literally just hit it. So, whoa, 1.5853. So, that's perfect. Okay, hit it, stopped, bounced. And that was part of the thing we're looking at the euro dollar. It hit the 1 deviation level. We didn't have major euro news. So, that's understandable. So, we had major negative pound news. So, that's understandable. It dropped to 2. But we go to 1.5855. So, 1.5855. We get 1.5860. Okay? And so we look at that. Let's pull it up. And that news came out at 4:30. Okay? So, we're going to pull it up right here. So, it's just right above the 1.5850. So, we're picking our strike based on expected move. Okay? And this is what I want you to see, how much money you could give away by not doing the trade correctly. And I think this is probably one of the most important lessons you can learn in trading. Binaries. So we go over here and we're looking at, when the news comes out at 4:30. Okay, so 4:30 right there. Comes out, like I said, you had about 5 minutes or so. All right, like I said, okay, so if you can sell it for about 90 bucks, then that means that's a $10 risk. So I said it'd be about 10 bucks. It's 10 bucks. And then I said, when it gets there, you close it out for about 50. A lot of times I'll use 57. That way, if it's not perfectly at the strike, I get filled. It also gives me a little bit of room for bid-ask spread. So if I'm selling, I'll buy back at 57. If I'm buying, I'll sell back at 43. Drops on down. Comes down here. You would have got filled right here. Okay, right around 11 o'clock. Comes back up, gives all the value away, comes back down, could have got filled again. You had another chance, okay? But if you didn't close the trade, if you didn't put your take profit order in, and by the way, you should be putting the take profit order in, not waiting for it to get there. There's no reason to wait, and you may not be disciplined when it does. You just gave it all back. Now the thing's back up to 92 bucks. So now you're losing on a trade that you should have won on, okay? So put that take profit in, use those deviation levels, very helpful. So that's the first tier. So we got that one. Let's go ahead and now we'll look at the next tier. So we got 1.5889. So that was our 60889. That bid us at 5,900. So let's check out that one and see how would that trade have worked out. Okay. And we can see it right here. We'll back it up. Get into right around 430. Okay. So on this trade, we could have got into the trade around 4:30, and again, you could have done the pullback even a little bit better. But let's just say like you got in you had that 5 minutes after the news came out before it took off and fell. So let's see here. So about $30 risk. You sell it for 70. It's $70 profit potential, $30 risk. Okay. On this one, it's dropping down. You have two choices. You can close it out when it drops down. Okay, at about 57. Now, that would not give you a great risk reward. Okay, it'd be like $23 profit on a $30 risk. Or if your target's 58.55, and I honestly would say probably close it out at 57. Don't be greedy. Just close it out. Okay? Yeah, you could have made another 50 bucks. I get it. But you also could have lost everything. The other option, okay, the one other option is you have this expectation for a move down to the deviation. And so, okay, so when it gets down to that level, then I'll close it out. And so you may put it down a little bit lower, like at 30 bucks. Okay, and the only other option, which I don't suggest doing unless you're planning on sitting in front of the chart the entire time, which to me sort of beats the purpose of trading Nadex. I like to trade and move on, is as it passes through each deviation, you're ready to close it out if it comes back above it. So like the bar that broke it. So like this bar broke it right here, so you'd be getting out like right now. Okay, this bar broke, so you'd be waiting. Okay, you didn't have to get out. This bar, broke, so you'd be waiting for it. So you didn't get stopped out if you waited on each bar that broke through each deviation. that would be another method that you could apply. But you have to sit there to trail the stop, because you can't have stops on binaries because they're way too volatile and you get stopped out all the time, even when the market barely moves. So it would not be good for you to have stops in binaries. But you can go, hey, if the price goes above this, I'm out right now. And the deviations are very, very, very good profit management tool. And so that's another option. Now, that was the second one. We're talking about tiering them. So let's check out 1.5923. Okay? So 5923 is going to put us up almost pretty much 5924. So it's going to be pretty close to where the market was at. Let's see, where was it at? Like right during that news. We're pretty much at 4. So this is basically our at the money binary. Okay? And so we can pull it up and let's expand it out. Tighten it back in a little bit more. And there we go. Okay, so right around 4:30. Okay, news comes out. Boom, this binary action jumps a little bit. And you can still get in it for about $50. Okay? And so you have a $50 risk, $50 reward. This one is the one that you're planning on buying back like at $3. Okay? So you're expecting it to really expire in the money. You put it on, you sell it, you leave it, you put a buy back at $3, just so in case it does come down and flies back up, you don't get nailed on it. And basically, you just put in 3 tiers. We could have done a 4th one if we waited on the bounce back up. But so I can show you that one. Let's see, how high did it go on the bounce back? It was basically at the same level, so it really wouldn't have been any kind of big advantage. But we could look, I mean, basically you're talking one more strike up. Let's see here if that would have been yeah, we have a 5960. Okay, so I'll show you the 5960. Basically, we have 4 tiers of trades we could layer in. Here's the cool thing. Our risk on the first one was $10. Okay, so if we do 3, this works out really well. Our first trade had a $10 risk. Our second trade had a $30 risk. Our third trade had a $50 risk. Okay, so that's 3 tiers of. And I'm not talking about dollar cost averaging, by the way. Okay, I'm talking about layering binaries. So we're going in and we're putting these binaries in 3 different layers of binaries. And so dollar cost averaging is going against you and you add in more. So we're not doing that. We're expecting different levels. But here's the cool thing. If just one of them hits, okay, then it can cover, like especially that first one, that one that we're looking to buy back at $3, if that hits, it covers the other 2. So that's the number one advantage right there, is if one of them hits, it reduces your risk or eliminates your risk and you walk in a profit. 2 of them hit, you're making money. 3 of them hit, you're making a lot more. So on one of them we made $40, on one of them we made at least 20, if not more, depending upon if you trailed it. And then, but again, you have to sit there if you're going to trail it. And then the other one, we made 50. So we got, let's just say if we didn't trail, so we'll say 50, 20, and 40. So we got $110 on a risk of 50 and 30 and 10 on a risk of $80. So not bad. And so this trade right here, the last one we're talking about, this would be more of an in-the-money trade, meaning it's above, the strike is above where the market's trading at 4:30. And you could have got in this one, and let's see here, $40 risk, $40 profit, $60 risk. Now, why would you go for that trade? Why would you ever do an in-the-money trade with more risk? The one advantage, okay, to an in-the-money trade is the market doesn't have to move. So if the market stays flat, you're basically, in a sense, collecting premium on the trade. So probability is in your favor, because if it goes up a little bit, I make money. If it stays flat, I make money. If it drops, I make money. So there is an advantage there, and a lot of guys do make some good money selling premium doing it like this. So stay right there, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here. So we just weighed together, basically a whole series of trades for you. You had the in the money, you had the at the money, and you had the two out of the money trades. And just want to show you, a lot of times people get caught up in just picking one. But, here's what's cool. If you go in, and here's probably one of the biggest advantages. Let's say you choose that in the money or that at the money spread, and it never hits your -2, or it never hits your -1.5. Both of those can still make money, okay? So that's a $90 profit. And the other two trades had a remaining $40 risk. So let's just say they both lost. Okay? So it's like it dropped down, and let's say this was the bottom, and then it just went flat all day. Happened to you, right? Happened to me. Happens plenty of times. Okay? So by doing the tiered, now of course you are taking on more risk. So when it hits, it hurts. Okay, of course, just like any other trade. But you also are taking off risk as it moves. Okay? So it's not like you plan on leaving all of them on until the end of the day. And you had, like plenty of opportunities to close them out. I mean, most of them, this one you could have closed out at 10 o'clock, okay? And then maybe even a little before 10 o'clock. And about 9:30 or so, you could have got out of that trade. And so that's, just one of the 4 tiers that we put together. And so you're getting out of one trade, like right here. It's not quite to that 1.5 deviation. Remember, you're waiting for that 1.5 to take profit on this trade, but you're able to get out of that trade. And a little bit later, as soon as it hits that, you got out of the at-the-money trade, and you got out of that trade. So now you're out of 3 of the 4, and now you have another one. Now you get out of that one when it drops down. But if it comes down just to here, and you're not ever able to get out of these 2, well, you still have since we got out at 10 anyway, right? Then we were able to get out of both of these and still make money and profit on the trade by tiering our binaries. So binary trading is not, or should not be, gambling, which is basically what the statement is. It's, the pound dollar will be less than, this price at this time. Who freaking knows? We don't know what time it's going to be at a certain time of day. Okay? So come to that reality, accept it, and now go, okay, so, but where do I think it will go to? What method am I using? Am I using fibs? Am I using deviations? Am I using, confluence of both, which is, a great way to put them together? And then set realistic profit targets, use that to pick your strikes, and get out when it gets there. Don't wait. Or if you are going to wait, make sure you're babysitting that guy, so that way if he does hit your level that you're expecting, that you're ready to hop on out. And, so like if it goes, but you have to have a razor sharp discipline, and you have to have the ticket open and ready, okay? And ready to get out right away, because these things will go from being worth $3 to being worth $40, and you could have just gave up a bunch of profit, okay? So make sure you're ready, you got your finger on the button, you're ready to go. And hopefully y'all picked up something new today on this. And if you haven't already done it, let me go ahead and show you what to do. Go ahead and hop on over to tfnn.com, okay? Step 1. Step 2, click on the Nadex banner. And at least open a demo account. If you want to know how to get the demo extended, just email me, dmartin@tfnn.com. I'll be glad to let you know. Click on demo account, okay? And then put in your username, first name, last name, phone number, email address. Takes 10 seconds. Hit apply for demo. They'll send you an email. You can log in. You can start checking it out. But then you want to learn more. How does this work? Okay, how do I put it all together? And from somebody who's trading it every day, hop on over here to the Diagnostic Box Spread Analyzer. Okay, so step 1, TFNN. Step 2, Nadex. Step 3, sign up for your 2-week free trial of the Box Spread Analyzer, the binary, and bull spread education, and you can also get the deviation levels. And even if you're not a Nadex trader, you're going to love these as a Forex or futures trader, period. Okay? So hop in there, check that out, and then you can go in as well. And step 4, okay, come to our free conference in Denver. Go ahead and register for that right now. It's February 2nd. Sponsored by Nadex. You'll be able to meet me, Tommy, and Dan Cook from Nadex. We're all going to be there and help answer your questions and train you on how we do setups and how we do dynamic trading strategies using diagnostic analysis on Nadex. All right, we all have a great day. Have a great weekend, and I will see you next week. Stay there. We got another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.